Morning. This is the zero DTE morning analysis. It is Tuesday, November 19th. So let's get to it. Today we're going to do a little focus on volume profile and how we use it. But before we do, let's get the criteria for today's trade out of the way. And those are three different things. The third, which will reference volume profile. The first is the market direction. Because we're doing an out-of-the-money butterfly trade, we are a directional trade, so we want to assess what the trend is. And then the second is our exposure to the volatility, how much we should expose ourselves to what the volatility will impose on options trades. When there's higher volatility, we want to be wider. When there's lower volatility, we want to be narrower. And we have two different ways of doing that. Both are, one is kind of a chunky way, looking at the volatility regime, and one is sort of honing in on what side of the range that we should be. Those will determine our width. And then the third is figuring out our entry setup. And our entry setup is actually an event that happens early in the morning. And the reason why we take a trade in the morning is that is when volatility is typically at its peak during a day. And will give us the best opportunity for price action, for volatility crush events, and that sort of thing. So we take trades in the morning session. Now, when I say there's an event that happens there, we do it during that period of time, but we're waiting for a pullback or a pull up into a market structure, and that's where volume profile will come in. So let's start with figuring out the first two, and then we'll get on to the entry event. So we'll go to the VIX, and not much different, not much changed from yesterday. It's almost exactly where it was, right on the edge of what I call zombie land and Goldilocks zone at about 16.63. So we're somewhere between 10 and 20 and 30 and 20 wide. So let's call it 15 to 25 wide. We want to determine our that's the big picture volatility. That's the what I call the volatility regime. As you go lower in volatility, a lower level of volatility, we want to constrain our butterfly widths to accommodate the accelerated premium decay and the extra gamma risk. So as we go higher, we can expand that all because, well, gamma risk becomes much less, the sensitivity to price, and the overall profit potential is much greater. So we can put on out-of-the-money trades with a nice risk to reward that are far less risky with more profit potential. So it's just our way of controlling our exposure to that risk. All right. So next step would be to, well, let's see. Can we do it right now? I didn't have my Thinkorswim open, so we'll wait for that to happen. And we'll go on to our next step. So while I'm waiting for Thinkorswim to open, we'll look at the volume profile. And let's take into consideration a trend. Trends don't go straight up or straight down. They go in a series of runners and risers, or moves, pullbacks, move up in the direction of the trend, pullback, etc. And the opposite for a downtrend. And of course, every time it pulls back, it's pulling back to some sort of resistive level. And that pullback typically happens on what we call a market structural level. And so that's our real goal, is to figure out where those market structural levels are, because those present opportunities to get into the trending move at an opportune time, maximizing the amount that we might get on that next running move in the direction of the trend. So the way we do that is we look at volume profile and analyze it to try to figure out where those structural levels are. And the easiest way to do it is to take a look at a high-level view of the profile. Right now, price is around 59 and change on the ES. We're using the ES. We only trade the S&P 500, and typically we're taking trades on the SPX, options on the SPX, but the SPX has no volume, so we're not analyzing it. So we use the ES, the E-mini S&P futures, because it does have volume, and so we analyze the profile there. Again, we're looking for market structure. So if you're familiar with the volume profile, then you know that we have these value nodes or volume nodes, and then the absence of volume nodes that I call volume wells. Some people call these high value nodes and low volume nodes. But in any event, the volume or the lack of volume or the intersection between where there's a lot of volume and then transitions to very little volume is a level of inflection. In fact, every feature inside here, including these deep volume crevices and cracks here, are very important. And every volume node, the edge of the volume nodes, as well as the tentacles that come up, are all very important. And if you were to engage in a little relatively easy study, it's no more difficult than, say, coloring inside the lines and identifying those areas of extreme change from volume to low volume or higher volume to low volume, you will have discovered the market structure. Now, as I said, in any trend, so that's exactly what I've done. I've created these lines that identify all those areas. Now, so we do that at a higher level. We want to make sure that we get all of the structure that's within the range that we're interested in trading. So when we zoom in, we see something like this. The vertical lines, as I said, we're trading in the morning. The vertical gray dashed lines are outlining the morning session. And so what we're looking for is an event that will happen on a structural level in between that section. Now, when a market is trending down or trending up, let's say it's trending up. And when it's trending up, it typically does something like this, right? The interesting thing is most of the time when it's pulling back at a structural level. When it's going down, it's the opposite. We're looking for it to come down and then pull up into one of these structural levels like this. So if anybody knows anything about price action and trading with the trend, you know that you're waiting for those pullbacks against the trend. And they typically will pull back into one of these structural levels. And so we just put one and one together to get two, and that is we trade with the trend, and we're waiting for a pullback into a structural level at that period of time where we find the volatility is at its peak. And so that's pretty much it, how we determine that. So if we would determine trend already, so for instance here we've seen what the trend is, it's down, and so we're waiting for a pullback into one of these levels, and then we take the trade, assuming the butterfly will be directional and below, like here. Same thing happened here. So we would maybe put a butterfly down here on this event. So it came down, pulled back here, and then we take a trend. And so on. So same thing happened here as well. Although it never pulled back enough for us to have a meaningful trade yesterday. So pulled right up to this level, and then we would put one down here again like this. But it never came back for a meaningful trade. So that was a loser. So we're looking for something similar today, for it to pull up at the market open into one of these structural levels, and then we'll take the out of money trade. So hopefully that is that's clear. And let's go back to the big head. Yeah, so those are our three primary goals: figuring out the trend direction, our exposure to the level of volatility so we can be right-sized in trying to get the most opportunistic situation in terms of the premium decay and available profit and gamma. And once we've placed that trade, we're then trying to place it in an appropriate place, and that will be on an event. We call it the entry event, at the most opportune time, again in the morning, and waiting for that pullback or pull up in the direction of the trend. And that will typically happen on a structural level or structural element, and we do that using volume profile. Hopefully this has been instructional and you got something from it. Please put comments down below if you want more information on that, or if you'd like to join our service. Have a great trading day.